Hello everyone, Justin with Deep Dive Stocks here, and today is your After Hours Market Dive for Thursday, September 18th, 2025. Let's go ahead and get started. Starting as usual with ES futures on the daily, we see that yesterday's brief aggressive ask has given way after slightly tapping into LDPM L3. Which I saw someone else putting LDPM L3 on the chart, and I enjoyed actually having a little bit of the aggressive or eager views. And so I've kind of been mimicking that, and so far I like it. So my forming standard setup now is 5, 6, 7, and then 3, just to kind of keep an eye on what people are doing in terms of collecting profit or buying the dip. But current conditions are bullish. We are transacting at the organic ask, and we are flowing up to the ask, so that means that there is good demand. If we zoom into the 15-minute, though, do we see the same thing? Not really. We see bearish liquidity on the near term, with LDPM L6 looking like it's being used as support. So if we go back to the daily, if we were to experience some pullback, it would probably be if we assume the same level that was yesterday, so that's about 1% down. But then if we really need a good support from that those organic levels, we would need to move 3% down to get to LDPM L5. So definitely worth keeping an eye out, especially as futures seem to be closing with this bearish liquidity testing LDPM L6 for support. So definitely worth keeping an eye out on the next few bars, or like in the after hours market. Moving along to one of the big movers today is Visa on the 1 day. It definitely looks very messy. We have this bear trap here. We see that while the bear trap was forming, so we have this 5, 6, 7 for the LDPM, but then we have this bearish LDPS, and so that's a bear trap. But we see as the bear trap was unfolding, LDPM L5 made its way to invert, right? So normally we would like to see LDPMs continue along their way. Whatever that aggressive, in this case, would be an aggressive ask that's pushing the spot down, would kind of dissipate, and then recovery would commence. But here on the daily, we see that it's a little bit more messy than that. We have this bear trap that has now actually kind of caused LDPM to invert. And so we do have this bullish liquidity with this spot down day, which is pretty unusual, admittedly. If we go to the 15 minutes, so if we zoom in a little bit, we see yesterday ended with this bullish liquidity. Let's go ahead and take a look. So we had that bullish liquidity, a little bit of a mixed LDPM stack. After hours, we keep this bullish liquidity. This is Wednesday, sorry. So Wednesday, bullish, 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 pre-market. And then in that pre-market, we see bearish liquidity brings us down to LDPM L5. So with that bearish liquidity, we know we're probably going to move down to that next level of support. So as the bearish liquidity continued, I expect this is what's going to happen. So we actually did, on a single candle, move down to LDPM L6, which is, how much of a move was that? A 1% move in a single candle, pretty impressive. But again, that's kind of what we were expecting. It did immediately bounce up, but liquidity is still bearish, so the expectation is that it will test LDPM again, which it looks like it has. And then this is right around market close. So that's how we end Visa on the 15-minute with this bearish liquidity. The good news for the bulls, though, is this is technically a bear trap right now. We have that 5, 6, 7 for the LDPM stack. So it's a bullish stack. So bullish stack, bearish LDPS. This tells us it's a bear trap. We don't see that same behavior that we saw on the futures or on the daily, where LDPM is looking to invert, but rather LDPM is relatively maintaining its trajectory. And so eventually we expect this to recover, but for now this is pretty bearish. Bearish liquidity has fallen through all 3 supports in the span of a day, and so the expected outcome is continued downside. Moving along, I thought it'd be interesting to look at Robinhood, in particular because it's had this bearish liquidity for a while because of this aggressive ask that keeps pushing it down to LDPM L5, and it looks like that's currently underway despite the price appreciation. So there are these kind of repeated attempts to get Robinhood to this LDPM L5 support, but so far that has not been successful. Unfortunately, though, on the daily, with LDPS still painting bearish prints, we still expect another attempt at that LDPM L5, so not quite out of the woodworks yet, even though spot has been going up. As long as LDPS is telling us that that aggressive ask is present, we need to be concerned for those liquidity vacuums, which might suddenly move spot down. But as soon as LDPS turns bullish, then we know things are moving in the right direction. But until then, we might need to test support once more. And if we look at how things evolved throughout the day, we started out a little bearish, but a little bit of an aggressive bid cascade walked in, kept things nice and bullish until about 2 p.m. when we had the introduction of this bearish liquidity, and that brought us right to LDPM L7, and it looks like we've fallen through, and we're currently trying to cling to that. I call that clinging whenever you get like a quick fall through LDPM, but you'll notice that the price sort of like clings itself to LDPM and then eventually falls. And so that's currently what's going on, it seems. We have this bearish liquidity, we're transacting at the organic ask, but we are flowing a bit at the organic bid, but we are flowing a little bit to the ask, so cling is likely to happen. But the liquidity is bearish, LDPS is painting these candles red, and so ultimately the expected outcome on the 15-minute is for movement down to LDPM L6 for support, which is about 2% down, which I think probably matches up nicely with what we see on the daily. Where's support on the daily? So from current spot to LDPM L5 is 4% down, so about halfway. We expect a little bit of support on the 15-minute, about halfway down. And in the most unfortunate circumstances, if LDPM L5 does fail, then we see LDPM L6 is 30% down, which is quite a distance to go if that support is to be needed. So technically bullish because of this aggressive ask, and we are flowing to the bid, so still expect movement to LDPM L5, which as we saw is 15 minutes down, and that's over the course of the next week to month, because it's that daily view. But then on the 15-minute view, which is kind of like tomorrow and maybe the next day, we see that there's a 2% liquidity chasm that spot is currently clinging onto LDPM L7 for dear life to avoid. Moving along, Tesla had a decent move today. If we look at the daily, we see we had that aggressive bid cascade walk in. We probably are starting to see the scoop form, or the wave, and in fact we do. So this is signs of profit taking. So this means this aggressive bid happened, and now there's some pretty aggressive profit taking occurring at that organic ask. So the people who are looking to sell high are in fact right now selling high. This gives neutral price expectation. If the bullish liquidity can absorb this profit taking, then price will just kind of flatline for a while. If it can't, then we will see the return of bearish liquidity, and then the spot will have to test the organic supports, which is currently about 14% down, and that's on the daily. So let's check on the 15-minute. In this case, I am going to get rid of these, except for my new guy 3. And here we see the market ended with this bullish liquidity, and then right before market opened, let's go ahead and take a look. Bearish liquidity entered, and it looks like that is what kept the day going. So this is Wednesday, so this is yesterday. We'll move it to 5. So the market ends, we had this bullish liquidity, looks like the dip buyers do their thing. We do move to, so we can see that there's a cool transition as as LDPM kind of continues its trajectory above spot. So what was once support is now a resistance. So we're watching the transition between buying the dip and selling the high. And so it looks like we start selling. Eventually, it gets to where the predominant flow is now bearish. So whoever was buying this dip, which is the same people that then become sellers, so naturally there's not a lot of cushion, right, for selling, which they then introduce. This produces bearish liquidity. And it looks like we pretty quickly fall through both LDPM L7 and LDPM L5 with that bearish liquidity. And it looks like that is what the day had for Tesla. So that as soon as that bearish liquidity came in, it looks like there really wasn't any attempts to buying the dip as price depreciated, as we see on the 15-minute. If the dip buying like we would see on, like we saw on, where did we see it? We just saw it, right? We did just see dip buying somewhere. But we would expect this LDPM L3 to kind of do a little bit of a scoop action if that was dip buying, but we don't see it. In fact, we still see that this profit taking is above price. Or this LDPM L3 is above price, so profit taking is still going on rather than dip buying, which is what we would see if LDPM had fallen below spot. So this is a particularly bearish outlook on the 15-minute. And it does suggest that on the daily, there is definitely a little bit of threat for this profit taking to push things down. But again, 15%, but stranger things have happened. So, but lots of buts, but those are the risks. But how the current outlook stands is things are bullish. And so we do expect this to be eventually overcome. This should be absorbed, this ask that we see on the 15-minute. And then bullish activity overall should continue. And if we look at the stocks for today, we see that there was a few big movers, but actually a lot of reasonable movers. We had 5% on MU, 22% on INTC. Was passiert hier? Okay. So we have an aggressive bid cascade happening on INTC. What do we have, earnings or something? In a minute. U.S. government invested in Intel, 433 million shares. So there we go. So we have a little aggressive bid happening, perhaps due to the news, but we can see that the bullish liquidity started quite 5 days ago. Last Wednesday, last week, we had this bullish liquidity, a little bit of bearish, but so that's quite exciting. I doubt we're going to be able to see anything. Well, there we go. So there's your aggressive bid cascade. And then, so we had two nice green candles, bullish candles in pre-market. This incredible aggressive bid cascade happens. And we can see L3 is now showing us that profit taking is happening and liquidity is bearish on the 15-minute with this aggressive ask, and we are flowing to the bid. Classic signs that we are the market. There's a good portion of the market that is taking their profits from this obscene price movement. So much so that liquidity is now bearish. We have a little bit of a conversion back to a bid here, but we do still expect, remember, the bullish and bearish always apply to movement to the organics, and in this setup, it is L5 as the first level of organic, and so we should expect those two to meet in about 3.36%. And if that bearish liquidity continues, then as we've seen by now 1,000 times, it should fall through LDPM L5. And yeah, so I would definitely just monitor for the spot and LDPM L5 coming together, seeing how they react with each other, and then either, if a little bit of bullish liquidity starts to poke back through, maybe another big bounce, so positioning for that, or moving down. Another interesting idea might be setting up a straddle, which one is it? But the idea is that, if we set our strike to LDPM L5 and we expect, say there's for now, there's a little bit of a preference for breaking through, but because we're still about 3% away, we can still, there's still time and opportunity for an aggressive bid to walk in, an eager bid. And so you can position that with a strangle or straddle, depending, you have to look that up, which one's which, I was confused the two. Or sell a calendar spread, right? Which I think actually selling a calendar spread, it wouldn't be terrible. because then you don't even care which way the price moves, so long as it just simply doesn't stay where the strike of that the short calendar is. But interesting times. That is an obscene amount of price movement, but we definitely see profit taking having kicked in, and so much so that we do now have this bearish liquidity. So movement to LDPM L5 at 29.24 definitely seems likely. And so that is your after hours market dive for September 18th, 2025. My name's Justin. Thanks for coming along. Thanks for hanging out. And I'll see you guys next time. Adios.